Right now, Bitcoin is doing something we have seen before in history, and if you were around in the last major cycle, you already know how this usually ends. Bitcoin ETFs just dumped hundreds of millions of dollars worth of BTC in a single day. The stock market is cooling off, and Bitcoin is now pressing directly into a major support zone that could decide whether we get a short-term bounce or the next leg down toward levels most people are not prepared for. At the same time, Ethereum is flashing a brand new short-term signal that almost nobody is talking about yet. Solana has just started confirming that same signal. XRP is sitting at a make-or-break level that could trigger a massive move in the coming weeks, and Chainlink is quietly forming one of the most bearish long-term patterns you can possibly see on a weekly chart. So do not skip this video. The next few days are extremely important for Bitcoin, ETH, Sol, XRP, and Link, and by the end of this, you'll understand exactly what to watch for and why. But before we even open a crypto chart, we need to talk about something that most crypto traders ignore: the stock market. Because whether people like it or not, the stock market and the crypto market are highly correlated in the short term. Not perfectly, not tick for tick, but when the S&P 500 shows weakness, Bitcoin and crypto almost always feel it. Right now, on the 1-hour time frame, the S&P 500 is clearly cooling off. It's showing short-term weakness, lower highs, loss of momentum, and a subtle rollover that usually spills into risk assets. And what is crypto? A high-risk asset. So keep that in the back of your mind as we go through these charts, because this weakness in stocks is not good news for Bitcoin in the immediate short term. Now let's talk about the Bitcoin ETFs, because this is where real, measurable sell pressure is coming from. On Thursday alone, we saw a net outflow of over $817 million from Bitcoin ETFs. That is not retail panic. That is not small traders. That is institutional money pulling out. And when investors pull money out of a Bitcoin ETF, the ETF provider has to sell Bitcoin to pay them back. BlackRock's ETF alone had almost $318 million pulled out in one day. That means BlackRock had to sell roughly $318 million worth of Bitcoin into the market. That is real sell pressure, not speculation, not theory, actual supply hitting the market. Now zoom out to the weekly Bitcoin chart. The bigger picture has not changed. We still have a massive bearish divergence active on the weekly time frame. Momentum has been weakening for months while price pushed up. That's a classic warning sign that a larger correction phase is in play. And on the daily chart, something very important just happened. Bitcoin just confirmed a daily close below the key support around $85,000 to $86,000. And since that break, Bitcoin has dropped to around 81K, which is almost identical to the previous low from November. This is where things get very interesting, because we now have a very clear, very defined support zone between 82.5K and 83K based on previous candle closes, and around 81K based on the actual wick low. This is a crucial region. If Bitcoin holds here, we could see a short-term bounce, but if Bitcoin breaks below 80 to 81K with confirmation, the next major support is not nearby. It sits much lower, around 74 to 76K, matching the lows from April. And here's the part that should make you pay attention. This structure right now looks almost identical to what we saw in early 2022. A fake breakout, failure to hold above resistance, choppy relief rallies, then continued dumping over weeks. History doesn't repeat perfectly, but it rhymes very loudly. So yes, we might see little bounces here and there, but the bigger picture over the next few weeks still looks cautious. Now zoom into the 8-hour chart. Bitcoin's RSI is now oversold. This is important, but not in the way most people think. Oversold does not mean Bitcoin is about to moon. Oversold usually means the market went down too fast, too quickly, and needs a little time to reset. That reset can happen in two ways: a small bounce or choppy sideways action for a day or two. Then, once RSI resets, price often continues in the original direction, which means a small relief here does not invalidate the larger bearish structure. Now look at the liquidation heat map. We already wiped out a major liquidity zone around 85K. Long positions got cleared, but now there is growing liquidity sitting around 72K. That does not mean Bitcoin goes there tomorrow, but liquidity often acts like a magnet if support fails. And between here and 72K, the only major support we have is around 74 to 76K. Now let's talk about altcoins, because this is where the short-term signals start appearing. Ethereum on the daily chart just broke below its 2750 to 2800 support zone. That's important, because if we confirm a daily close below 2750, that level becomes resistance, and the next support sits around 2630. Below that, things open up toward 2.1 to 2.25K if this correction deepens. But on the 6-hour chart, Ethereum is forming something interesting, a potential bullish divergence. Lower lows in price, but higher lows forming on RSI. It's not confirmed yet, but if it confirms, the most common outcome is not a reversal to new highs. It's a short-term relief bounce or sideways action for a couple of days, a break from the heavy selling. However, Solana is already starting to confirm this same signal. On the 6-hour chart, Solana has confirmed the bullish divergence, which means Sol is very likely to see a small relief bounce or sideways break from the heavy selling in the coming hours or days. Short-term only. This does not change the bigger bearish structure, but it does mean we may get a pause. Now, XRP. XRP is at a true make-or-break moment. On the weekly chart, XRP is starting to break below the crucial $1.80 support. This level has held for a long time, and if we confirm a weekly candle close below $1.80 and fail to reclaim it, XRP could drop hard toward $1.60 and possibly even $1.30 to $1.40 in the coming months, because there is still a massive bearish divergence active on the weekly time frame. That's why I've personally opened a small short position on XRP, not fully committed yet, because on the daily chart, XRP is also forming a possible bullish divergence. If that confirms, we could see a relief bounce, and I would close the trade. If it fails, and we confirm the break below $1.80, I would add to the position. This is a decision point for XRP. Now, Chainlink. Chainlink looks even more bearish. On the weekly chart, the next major support is around $9.50 to $10, and if Chainlink confirms a weekly break below $9.50, it completes a massive multi-year head and shoulders pattern that has been forming since 2023. That is a textbook bearish structure, and if it confirms, it could lead to a very large move down. And this is where most beginners make a mistake. They think you can only make money when prices go up. That's not true. You can make money when prices go down using short positions. You can make money in sideways markets using range strategies. You just have to understand what the market is doing. Right now, this is not a buy everything and hope market. This is a be patient, be selective, and understand structure market, because we are at key levels across the entire crypto market. Bitcoin at major support, Ethereum forming divergence, Solana confirming divergence, XRP at a weekly breakdown level, Chainlink near a multi-year pattern trigger. This is not random price action. This is a market preparing for its next move, and the next few days will tell us whether we get a short-term relief bounce or the beginning of the next leg down. If this breakdown helped you understand what's happening across Bitcoin, Ethereum, Solana, XRP, and Chainlink, and how to think about both short-term signals and the bigger picture, make sure you hit subscribe, because every single day I break down these charts so you don't miss the setups, whether the market is going up, down, or sideways. And I'll see you in the next one.